Hi, and welcome to the Market Alert for Thursday, the 8th of May 2025. So the FOMC summary was clueless, according to this headline. And who can really blame Powell for this one? I'm not fond of any central bank or central bank chiefs either, but I think we're all clueless at the moment. We're all in the same boat because we haven't any idea what Trump is up to, and you'll see that in a moment. Powell clearly wants to wait, but he could not explain what they were looking for in the data that would get them to move. Well, I'm in agreement with that, I have to say, and I think most people are as well. US stocks finished in the green, but with gains capped and price action choppy. It certainly was. And stocks and bonds chop as Powell maintains wait and see approach. And this is what I mean. If you look at this headline, this has just been released. Trump set to announce US will agree trade deal with UK. Sky News understands this as, say, only released about 10 minutes ago as I record. But we don't know if it is actually going to be the UK. Trump put out on his own social truth media that there was going to be a major announcement at 3 p.m. this afternoon, so keep an eye on that. It could be the UK, it could be anybody else, but there's an assumption being made here it's going to be the UK. Right, let's see what other news we've got today. It's a French bank holiday, and then we get into the UK interest rates today. And you can see it's 9 in favour of cutting rates from 450 to 425. And then have we got a statement at all? There probably will be. Oh, there it is. Official bank rate vote. Oh, that's the votes. Normally you get a statement, but that may be coming later. Oh, there it is. It's there. The reports there. It's at the top. Normally they follow after the numbers. So from 12:02, Bailey will be giving a report on interest rates and obviously making the announcement that they're going to cut by 0.25%. Right, let's have a look at the market's reaction to the FOMC yesterday and kick off with the Dow. So in the Dow yesterday, the market sideways, to be honest with you. It's very rare to see such a small bar, but then again it was already predicted and baked in, as they say. Market's moving higher. Despite this, it would have moved faster if it had been a cut, but as the market's on hold, it's still no reason to move lower at the moment, and it's heading back up to the 200 MA and also these two pink lines. We want some references there. The next upside target is going to be 42569, and the main thing is the market's above that psychological 40,000, and that's why I've left it there. It's a big number for the Dow. But in the detail, 30-minute chart yesterday, market really quiet, range bound, managing to move up and then of course slam down, and then the market sideways. But overnight, for whatever reason, it's now moving to the upside. There's no reason to sell off because the rates aren't going to be cut. It shouldn't even be this high anyway, but it's the way the markets are now, the algos, etc., moving the market back to the upside and through yesterday's high already there in the 30-minute chart. In the German DAX, today is the day I suspect that we get through the all-time high 23,478 with the UK cutting rates. It's going to support the European markets, and it's just a matter of either it does it before lunch or it does it after the announcement. If we look at the 30-minute chart, so we had a bit of a sell-off there yesterday down to the 200 MA. Doesn't matter what time frame it is, if you get the market go down to the 200 MA, always watch this level along with those daily highs and lows as well. So overnight the market's followed the Dow. It hasn't quite broken yesterday's high, and we've got this new low. But as long as it stays above the 50 EMA 20 bar DP and close, then it will be fine. But I don't be surprised if we actually see the market get through 23,478 during today. And in the S&P 500, similar thing, the market's moving high, nowhere near its all-time high at the moment. We've got the 200 MA to get through though, and these two recent highs that need to be taken out. We can see we're more or less back now from the Trump fiasco as prices have managed to move higher. But we need to get through that 89% retracement, which I think we're just about doing there. In the 30-minute chart, again, sideways yesterday, got choppy during the cash market, and then the FOMC meeting minutes, and then we've gone through the high. Similar picture there to what we saw before in the daily chart. So the momentum now, we've got the averages there, both the 50 and the 20 bar moving average coming back through the 200 MA there to keep every average and showing the momentum there in order. It's always the 5, 20, 50 EMA and 200 that show that sort of order when the market's bullish. Meanwhile, in the UK, obviously it's going to get a good response today with the Bank of England cutting rates. Again, you can see all of these resistance lines here where the market failed before. So if we just see if we can mark one of those up, that's where, which ties in more or less with the high that we can see there to the left as well. So a bit of resistance at this level. So if you trade the FT100, 8693, just rounded up to 8,700. 30-minute chart. Again, yesterday, like the DAX, lower, and then we got to the 200 MA and the market moving higher, and overnight prices found support at the DP and have continued, and also above yesterday's high, which means, again, we can expect further upside potential here. The all-time high in the FT100 is 8,910. Seen a lot of videos about a crash, and I'll make that statement again that I made a couple of weeks ago. No crash. No crash. They've got the tools, they'll cut rates, and that's probably why Powell is saving all of these tools to keep the markets afloat. There will be no crash this year, as there's no reason to. They've had their opportunity with, I mean, you have to look at this, don't you? You know, you see the market drop, they say, okay, postpone the tariffs. That's a tool. Postponing is a tool. Markets back up. Rates have been kept on hold, keeping those in reserve just in case they have to do what they did in 2007 and cut aggressively. So again, more tools. They can print as much as they want. Again, more tools. So I don't see a crash coming at all at this time. And also, as I've said, by the time we get to July, they'll be lucky if there's anybody to do tariff deals with, because the number keeps diminishing. But keep an eye on that one this afternoon. If it is the UK, it's probably going to be about 10%. It won't have much of an impact on the market. Famous last words, but I can't see it myself. It's a tiny percentage compared to the ridiculous numbers that he was throwing around back a couple of months ago when he was going to put a 200% tariff on Europe for champagne and wine. The idiocy of this man is just breathtaking, to be honest with you. He still thinks he's in the real estate business. But there you go. It is what it is. We have to just deal with it. So in the US dollar, this did strengthen yesterday. As I said, they hadn't got a cut, and no cut is as good as enough support for the US dollar. So don't be surprised if we get a bit of a move to the upside on this one. It depends how it interprets what he's got to announce later today. Let's have a look at the metals, and particularly gold's reaction to what happened yesterday. Let's have a look at gold to start with. The market sideways yesterday and also struggling, as we can see there as well overnight at the moment. 30-minute chart. See, we just had a bit of a sell-off there. We went up and then back down to the close. We could go down and test the low there as well. Yesterday, the market really quiet, obviously waiting for those FOMC meeting numbers. The metals markets like rates lower, but didn't get that, so this is why you've seen a bit of a shakeout there. Meanwhile, in the daily chart, silver down yesterday, some selling around there, inside bar to the upside at the moment. So let's just see where we are. So there you can see the move to the downside yesterday. Then we see the volume coming in late last night, and then overnight in Asia, prices have moved back to the upside there. Quick look at the gold-silver ratio. We've managed to fill the gap, as you can see there. So we could get a bit of a move to the downside as silver plays catch up with a move in gold that we've had in the last few months. Hopefully, but it's just a wing and a prayer, obviously, because the banks still have control of slamming the silver price. To think that we're sitting at 102 ounces of silver to 1 ounce of gold is just beyond belief, to be honest with you. But again, it is what it is, and a sign of the times, and it also keeps the pressure on the silver market to stop it from exploding higher, which is not something that the Fed want. So let's have a look at the UK market, the DAX from yesterday, the 2-minute chart. So in the pre-market, we had a rally up. I thought we were going to go up to the high to begin with, but we only managed the close. We then saw the market come back, and then we get into the opening salvo with the cash market. The market was really quiet, and then we had a move to the upside there, up towards the 200 MA. The market halted, reversed, and came back, and then we had a potential sell, which we saw the market move down. You can see there 30 points down to the DP, and I had to get out of that quickly as the market came racing back. Where did it stop? It stopped at the 200 MA, and prices then reversed once more, then found support, just obviously treading water, waiting for those FOMC meeting minutes. Market breaks through the 200 MA, stops at the BRN, the big round number, back to the 200 MA for support, and then moves back up, and then we get some selling coming into the market with a sell signal, economic news, and then the market once again moving lower, as you can see there, back down to the DP where he found support the last time, and then sideways, as you can see there, waiting for the Dow to open, drifting lower over 100 points. And then we get into the afternoon trading session there, which is market is sideways again, which you would expect with an FOMC meeting minutes. We then had a sell signal just before the end of the session. Market moving down there nicely. Again, you can see the retracement from the high down to the low that was made there, and then prices trading sideways and waiting for the FOMC meeting minutes, which I don't have recorded, but we know the result of that anyway. So a quick look at where we are in the live world of the German DAX 2 minute. We're very choppy and sideways at the moment. Let's just have a look how far away we are from any sort of support. We've got the 200 MA down here, we've got the high up here, and the R1 as well. So at the moment we're about 70 points away from the high. May get a shakeout to begin with down to the 200 MA and the 23,350 level before having a go up to the upside. You just never know. Anyway, that's it for this one. Keep an eye on that 3 p.m. announcement from Trump and the US, as the US markets open just at that point. It's likely to be a positive, even if it's only an initial sense of positivity, moving the markets to the upside to begin with, and then the reality of these tariffs kick in and the market starts to move lower. Okay, that's it. Have a great day, and as ever, thanks for watching. See you in the next one.